And right now, folks, as we do each and every Wednesday at 40 past the hour, we're going to talk to our man Teddy Kekstadt. Head on over to the front page of TFNN. Right under the newsletter tab, folks, you can subscribe to Teddy's outstanding newsletter, the Tiger Forex Report. You click that subscribe button. It's only $97 a month, folks. You get a 30-day money-back guarantee. Teddy puts out an outstanding report every Monday. You gain access to an archive webinar. And don't forget about a couple of great webinars. Check them out, folks. They're only $97. Japanese candlestick pattern, stock and option strategies, and capitalizing on time with calendar stock option spreads with our man Teddy. Teddy Kekstadt, good morning.
Good morning.
So we got a little bit of volatility with rates, the Fed. We had a jobs Friday in there since the last time we talked. We have a dollar at 98. What do you think about this market, Teddy? We got a lot going on right now.
Well, I think right now you had a nice little rejection last Friday in the dollar index, and we're riding support, which I think we're going to do for at least another I don't know, I'd say 3 to 5 sessions at least, something like that. I mean, Friday was, we were in a corrective rally for the dollar index for the past month, and it was a grind. So, I mean, the overall trend for the past few months is definitely lower. So I think you really saw that we hit the upper boundary. I would key off of last Friday's high. Obviously, if we can break out and get a rally above last Friday's high, well, that would be a totally different story. So, but we've been hovering below this 101 area in the dollar index without being able to really spike up at it, and that kind of keeps me in this mind frame that we're going to be in this. We pretty much have hit the upper boundary right now, if you will. So, I mean, the expectations with the Fed obviously are it's a very mixed bag of goods. So, I would stop listening to the daily, flashes here and there, because until there really is action, there is no action. I mean, obviously the tone around the Fed is changing, maybe not so much with the Fed chairman, but as far as with the rest of the Fed itself, it seems like there's, I wouldn't call it dissension. I would just say the tone is changing. So,
sure.
And I think that, that I'm sticking to holding to my what I said already over a couple months ago, is that until Powell's out, he's not doing a thing. But with the expectations of him leaving, and who knows who's going to put in, like, I wouldn't doubt that Trump makes the appointee known long before Powell is going into office.
Yeah.
So, and right now, I think that's going to have an impact on the short-term rates, especially where, we'll be probably buffering towards, higher yields, leaning that way for the next month or two, at least. So, but I mean, I would look at them as spikes. I mean, right now the market is definitely ready for some real action to call for cutting. Now remember that we started this year off with the expectations of a 0.5 point rate cut sometime over 12 months. We're 8 months into the year right now. So without any action whatsoever, and a very negative tone from the chairman.
Sure.
So with that being said, if I'm right, and regardless of whether Trump announces who they're going to do early or not, the expectations are that you're going to see at least a 0.5 point to a point rate cut, which would put us back to that rallying point where we were already, months ago, where we're like, okay, we know the upper bound of where yields would retract to at least, because we had already a 3/4 point factored into the market, and it never happened. So now I think if we get that expectation, we should shoot back to those prices, meaning higher prices in interest rate futures and the cash market, meaning lower yields. And that's kind of a turn I think will start to occur long before the action actually does happen. The market is usually forward thinking. So I think that, each day the hourglass has been tipped over on Powell. So every day, no matter what, the market's expectations of a rate cut now are increasing, because they know his time in office as chairman is going to be expiring soon. So,
sure.
And until then, we're going to be in kind of a choppy range trade. It's, I would be prone to not listen to the news right now. What I would wait for is when you have any defined, like I said, forecasts of who the next chairman will be, and God forbid Powell actually does something. But I honestly think that Powell's on a mission to do nothing as long as as long as Trump is president. He's not going to do anything.
And yeah, no, it's a great point in terms of all the market cares about what's happening in the future, right? And if they know who that man or woman's going to be that's coming in May, it really doesn't matter what Powell's doing, because it's just like when we have earnings, folks, this morning, right? It never matters what they did the last 90 days. Tell me what you're going to do in the next 90 days, the next year, whatever it is. Boy, it's going to be interesting to see how that plays out. And I would agree that we probably get somebody earlier than usual. How early we get them? Maybe that even accelerated things last week with one of the governors stepping down. We'll find out. Now, I was thinking of you, getting ready for the program coming on today, and thinking about, okay, so we've gone through this period, because I kind of have a little bit of similar, thinking about what you're talking about here in terms of, okay, no matter what happens with Powell here, folks, okay, somebody's coming in to lead the Fed in 9 months, and the pressure's going to be on rates to go lower. Is this an area, and I love how you say, maybe 2-3 months. So is this an area where, over the next 2 months, maybe a little bit of patience, and then we're looking for that next acceleration? And that's kind of what you said, but is that how those kind of line up when you're looking at the dollar?
Absolutely.
Yeah.
Absolutely. Cool. That's the way I think it's going to be. And then I think the yield curve is going to be in play. So, and right now, it's been choppy, as far as, the short terms versus the long terms. But I truly believe that when we have that news, you will start to see a spark there's going to be a disconnect between the short and the long terms. And when that spread starts to move, then I think you're going to start to see the actual direction of rates overall trending lower, meaning higher prices in the 10-year and the 30-year and the short terms.
Okay. We'll see how we go, man.
You'll be able to buy bonds again.
Yeah, right?
Is basically what I'm saying. Right, and right now, if you were pouring money into the market right now, I would be very cautious on putting money into the bond market. I would wait until once that comes in, then I would be saying, you know what, for the next 6 months at least, you should have no problem with your money in the bond market.
Nice. Nice. I know. Hey, it's an interesting time. We say it all the time, but it really is. We're right on the cusp. And where we are in terms of the pressure on Powell, it's going to be interesting. And 9 months,
that'll help with commodities too, and inflation too. As rates go down, the cost of carryover goes over. That means the cost of food, energy, everything drops by not significantly, but it does help to reduce it. So that's a factor that will definitely help the overall broad economy to some degree.
The cost of your mortgage, right? I mean, I can't wait to see what kind of stimulative effect. I mean, that's a little bit of what the Fed claims they worry about. But it's people have a lot of money locked in, and even just not even locked in. Right. The power for people to buy a house, right? Let alone what's locked into that equity to buy that house
or remodel. How about just remodel?
Right. Take some equity out, remodel, whatever it is, folks. It's a big number, man. And that one, poof. Right. And hey, we got 30 seconds. What do you think about crude, man? Yeah, $65 yesterday. We're at $66. What do you think, man?
I think it's treading lower. There's any rally is a rally to sell right now, I think. There's downward pressure. It's just going to be weak right now. There's no real major fundamentals going to push it.
Teddy, great information, man. I love it. I align with a lot of what you're thinking, and I look forward to talking to you next week, man. And folks, check out that Tiger Forex Report. Great information. Teddy, have a great week, man. We'll talk to you next Wednesday.
Take care, Tommy.
Take care. We'll be right back, folks. Stay tuned.